Ashish Vaidya, head at FICC Trading, UBS AG, now joins in on the show. Ashish, thanks very much for joining in. To start off with, we are seeing that system liquidity shortfall in the system, and given that we are bracing ourselves for the monetary policy, what are your expectations from it this time around? Perhaps a CRR cut to the tune of 50 basis points once again?
Absolutely, I think that's certainly on the card. But I think that probably comes just in a couple of days, I guess, because the next fortnight starts from Saturday. So my take would be it could even be just before the rate policy.
Right. You know, Ashish, the daily deficit for today has dropped to about 126,000 crores. What would you attribute to the fact that, we did see it go up to as high as about 180,000 crores a little earlier in the week?
See, the way this CRR balances are maintained is on the basis of a fortnight. Now, we are towards the end of the fortnight. The fortnight closes on Friday. So, this kind of volatility towards the end of the fortnight is always seen. In fact, yesterday you saw a number which was much lower. Today it is 125. So this is just some sort of adjustment which is happening. But on a very, broad basis, I think what we are looking at is a systemic shortfall of roughly about 1,35,000 crores, that kind of a range it's being in.
But Ashish, there are
hence, the expectation of CRR cut.
Sure, but there are some of your colleagues who believe that the systemic shortfall is going to go higher than 200,000 crores by the time all the advance tax payments flow out. Would you go with that number as well?
See, I'm not sure about much higher, but let's face it, if there's advance tax which are estimated to be somewhere in the region of 45 to 50,000 crores, and you have a CRR cut which would infuse about 32,000 crores, then it sort of matches off to a large extent. And let's mind one more thing, that going towards the end of the fiscal, there are going to be expenditures lined up by the government, unless they go for expenditure cuts. In that case, the fisc will look slightly better. But otherwise, you should be expecting some sort of expenditure from the government. And hence, the liquidity situation will sort of get contained.
Sure. So by the first or second week of April, where do you see the shortfall at?
I think my take would be, I think anywhere between 80, assuming there is a CRR cut, anywhere between 85,000 crores negative to 1,10,000 crores negative.
So sure, that's still 2% of, it's still about double the deficit position that the RBI has said that it is comfortable with.
Quite right, absolutely. And that's the reason we are expecting CRR cuts and probably OMOs going ahead.
Ashish, just also to bring to your focus some of the other macroeconomic factors, you've had the inflation trajectory which has been on a decline. IIP data also has been showing a bit of contraction. How do you expect the sentiment to prevail in the bond markets now?
I think the sentiment in the bond market is a function of, currently it's a function of what the RBI is doing in the OMO. So you're seeing, in fact, the volumes have been sort of dropping in the bond markets of late. And it's basically being supported by what the RBI is doing. I think clearly we'll have to, going ahead, we have to keep a watch on what the RBI does, whether they continue with the OMO, whether the shortfall continues to be 1 lakh crore plus. In that case, they would sort of, we would estimate that they would continue to come in with OMOs. And if that continues, then till then the bond market is well supported. Once that is out, then I think we'll really come to know as to how exactly, my take would be that I think the yields can actually move up by about 20 to 30 basis points if the RBI gets out of the buying mode.